Here with us now is Chris Haverkamp with Paragon Ag Advisors in Silver Lake, Kansas. Thank you very much, Chris. How are you doing today?
Very good, I guess. When you see the markets this past week, all you can do is kind of shrug your shoulders and say, well, I'm doing better than the markets are.
Wow, what a day on Thursday after we had that export sales number. The Dow was sharply lower that day. It just seemed like there was a lot of different factors that caused Thursday to be one of those days where it was just a risk-off day in all of the commodities, not just the grains. It was livestock as well. It was everything but the dollar and cotton.
Right, yeah. I mean, just when it felt like we were starting to catch some momentum, John, to the upside in beans and in corn. Even wheat was trying to follow along and just on the verge of breaking through some technical resistance on Tuesday and Wednesday. Then we had the big sell-off on Thursday, and you're right, it was a across-the-board, risk-off type of day. We've heard that terminology used several times over the course of the last 2 or 3 years. But yeah, no real one reason, but I would say that export sales did not help anything. That kind of added a little fuel to the fire, selling if you will, and we did not like to see those very soft export sales. And they weren't just weak on soybeans and corn, they were also weak in the livestock sector as well.
So do you think we can recover on the technicals and the charts from all of this damage?
Well, we've done some damage. It's not horrible. I do feel like we could recover. Obviously, we have some various things to deal with. Last week we were talking about harvest delays and potential problems with the soybeans, from shattering to sprouting in the pods to now this week. Although we can't repair that damage, we actually have clear skies, or some areas are going to see some clear skies, and we're going to see some progress on harvest pace. So that just, again, is a bearish item that we have to deal with at this time of the year. And until we can get 50 to 70% done and possibly get some stability on the technical side, it's going to be a bumpy ride. I think you better strap in for the next week or two, again, until we get harvest closer to being wrapped up.
We talked a lot about those export sales numbers and how drastically lower they were. What was interesting to me in that sales report was actually it wasn't just corn, it wasn't just soybeans. Wheat was kind of the exception, but cotton, rice, there was a lot of commodities that just didn't seem to have much sales action. And we didn't have any really overnight sales to report, which in my mind was a red flag going into that report. Was there anything behind it other than a stronger dollar? Well, even the dollar was hovering around that 70-cent mark. So what can we put the blame on for something like that? Do you think it's a one-time deal?
Well, I think, at this time of the year, we do see a lot of trade activity slow down. What it feels like right now is the merchants or those companies that would be big on the export front, they're just very nervous. They're nervous about tariff, the trade, and where things are going to look, where things are going to go rather in the next 30, 60, 90 days. And I think they're more concerned about inventories. If you look at the National Rail Report, you see significant improvements week on week. So there is plenty of activity of moving product, but it's stuff that's already been traded. And I think they're just wanting to keep their inventories rather low for multiple reasons. Again, the concern out of White House. We also have midterm elections coming up soon. So I just feel like the traders are very cautious at this point.
What's the best way to get a hold of you folks there at Paragon?
At any time, John, give us a call, 888-452-8751.
All right, thank you very much, Chris. Chris Haverkamp, Paragon Ag Advisors, Silver Lake, Kansas. Don't go anywhere. We've got more of the program coming up in just a moment.